Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to be talking about a very important topic for any options trader, which is finding your directional edge. Because with any option strategy, especially when you're speculating, your largest exposure in any options position that you're going to take is largely going to be based on the movement of the underlying stock. So it's really important to have a good gauge as far as where you think the stock will go to help you make sure that you are positioned correctly within the option strategies for that. So what we want to explore here today is the indicators that are available to you here at OptionsPlay that allow you to gain that directional edge. And for that, I'm going to talk you through two primary indicators that we use. I'll break down what those indicators are, why we use them, and how to use them in conjunction with each other to gain that directional edge. And then what I want to do is I want to show you examples of this, because I think that's the best way to learn these indicators, is to show you as many examples as possible and show you how we've built up this platform to really make these two indicators very visual so that it's extremely easy for you to pick up any symbol and get a quick sense for what directional view you should potentially have on that particular symbol. And then, like I said, then leverage option plays on top of that so that you can take those directional views with limited amounts of risk. So let's go ahead and get started. Before I do, just a quick disclaimer. What we're discussing here today is purely for educational and demonstration purposes. They are not an offer to buy or sell any specific securities. And for those of you that do not have an OptionsPlay membership, you can sign up through the link that I'm going to post into the chat window right now. This gives you a free 30-day access to the platform that we're going to show you here today. So especially for those of you that are new, important that you sign up, because then you'll be able to access the indicators that we're going to talk you through here today. Membership is just $75 a month or $500 a year. Included with that is a free 12-step options trading course to help you get started. Even if you're currently a member or already on your free trial, you can still click on that link and sign up to get access to that course if you'd like. And this, of course, gives you access to daily options trading ideas like the ones that we send out every single day, included as part of your membership. So with that, let's go ahead and get started. I have a lot to cover here today and we don't have a lot of time. So I want to go over a few different things. Number one, paralysis by analysis. This is the thing that we all suffer from today. Too much information, information overload. How do we get through all of that? So in order to do that, we're going to talk about two indicators. We're going to talk about trend indicator and relative strength indicator. I want to talk about how we determine trend, how we determine relative strength, and more importantly, how do you gain a directional edge by combining those two together? And then once you understand that, we're going to go through as many bullish and bearish examples as possible to help you understand, number one, how to utilize our platform and how to use the visual guides that are available to you on OptionsPlay to quickly decipher any option, any stock or ETF into a directional view. At the end, we'll do a live analysis with OptionsPlay. I will ask for some symbols from you guys from the audience, just to make sure, just to show you how easy it is to use our platform to gain that directional view. So let's go ahead and get started. So I think this concept of information overload is something that most people can are familiar with, is the concept of the fact that we have so many news sources, so many indicators, so many different ways that we can get our information that it becomes actually less useful than anything else, because there's too much information and you get conflicting signals. And the question is, how do we simplify? And the answer is we don't want to necessarily, what we want to do is we want to simplify, but we don't want to make things too simple. So what we use here at OptionsPlay are two primary things that we think are very important to gain that directional view or gain that directional edge. So, and that's our trend analysis and our relative strength indicators. So trend analysis is very simple. It's simply trying to look at historical patterns and trying to predict the future based on those historical patterns. And there are many different ways that you can go about doing trend analysis. There are common ones that many of you have heard of, such as moving averages. Those are simple ways to potentially utilize historical averages to get a sense for where something will trend in the future. There are more subjective terms such as trend lines and channels that you can draw to also give you a sense for whether something is trending higher or lower or maybe sideways. However, what I tend to find with a lot of these indicators or trend, whether it's moving averages or drawing trend lines and channels, is that there's a lot of room for interpretation, because you can use a 50-day moving average, you could use a 200-day moving average, and there's different ways that you can use those moving averages. You can use a combination of moving averages. So even though these are good ways to determine trend, I tend to find that there are so many variations of this that many times people still get information overload, even if they use a simple moving average. So we use trend analysis in a slightly different way, and I'll show you that in 1 second. But trend analysis is really the ability to look at an asset against itself and getting a sense for where it's going to head in the future. Conversely, just looking at an asset against itself sometimes is not enough. That's why we use relative strength. Relative strength, instead of calculating the performance of an asset against itself, it compares the asset's performance to the broader market. And this gives us a sense for whether a stock is underperforming or outperforming the overall market. And we could also do it against individual sectors, but generally speaking, we look at stocks against each other to get a sense for whether it's in season or out of season is, I think, the best way to put it. And there are simple ways to calculate this. You can simply take the asset's price, so a stock price, and compare it to how it's doing compared to the market. There are more robust methods, ranking methodologies. Probably the most popular one or most famous one is IBD's Investment Business Daily's ranking that they provide on all stocks. Zacks provides something like this. Stockcharts.com also provides a ranking like this. We use a more robust method like one of these three to get a sense for relative strength, because we're calculating relative strength instead of just across a single period of one stock against the market. We look at multiple periods across multiple indicators to get a more robust reading of relative strength. So what you see here is that these two indicators, trend gives you a sense for how an asset's doing against itself. Relative strength gives you a sense for how they do, how an asset is doing compared to other assets. And this is really the full picture that you want to see. You don't want to just see one or the other. So what we really want to show you is how you can combine these two indicators together to get a sense for a directional view. Now, one of the biggest problems, like I said before, is the fact that even though we know moving averages is one way that you can identify trend, there are simply too many moving averages you can use. There are too many different ways to interpret moving average. So even if 5 people looking at the same 20-day moving average, you might get 5 different interpretations of that moving average. And that's the thing that we typically struggle with, I think, or many traders struggle with technical analysis. So that's why here at OptionsPlay, we really wanted to give you a simplified view of these indicators. And instead of giving you specific indicators to look at and teach you how to look at those indicators, we do the analysis for you and only give you an output. And the output is based on the same methodology day in and day out, so that all you have is a consistent reading of the same moving averages day in and day out. Because one of the things that we really, as a strategist myself, working with clients over the last 13 plus years, I've really discovered that even though users using a 20-day moving average today might find themselves using a 50-day moving average the next day, or a 200-day moving average the next day. And we tend to find that people use moving averages that confirm their biases that they originally have. So what we want to do is we want to remove that bias by doing the interpretation for you and only giving you the output of those moving averages. So we use a triple moving average to determine our trend indicators. So what we do is we have a trend analysis tool on our platform, which spits out the 1 month and 6 month trend. And you can see it in 2 places on your platform. You can see it up on top. the 1 month and 6 month trend, you can also see it at the bottom of your chart. So our trend indicator not only tells you what the current 1 month and 6 month trend is, but also shows you how that's changed over time. So you can see not only how it's changed over time, but how the stock has performed since the change in that trend. So here, as you can see, Micron went bullish here around $45, and it subsequently moved higher. And I not only can I see how long it's been in a trend for, but what the performance of the stock is since that trend has changed. So very important things to look at. On the second part, like I said, relative strength, there's a lot of different ways to calculate relative strength. So what we provide is what we call a technical score. And a technical score is instead of showing you relative strength with lots of numbers, we give you a very simple reading, 1 to 10. 10 are the weakest stocks in the market, 10 are the strongest stocks in the market. We use a 6-factor model to create this, 2 short-term, 2 medium-term, 2 long-term technical indicators, and we combine all 6 indicators to give you a sense for how a stock is performing against each other across the entire market. So what I want to do is I want to show you how you can use these 2 indicators in conjunction with each other to actually gain that directional edge. And that really is quite simple. There are 4 categories that you can find yourself in when you use these 2 indicators, and I'm going to walk you through each of the 4 of these, and then I'm going to show you some examples so that you can see how easy it is to decipher them. So the first 2, I think, are pretty straightforward and easy to understand. A strong bullish and strong bearish stock. These are what we call trend following type methodologies, meaning you're effectively trading with the trend. So a strong bullish stock is a stock that has strong relative strength and is currently exhibiting bullish trends. So both the relative strength, meaning outperforming the overall market, and the stock is trending higher. These are your primary bullish candidates. Conversely, on the bearish side, these are stocks with weak relative strength, so stocks that are underperforming the overall market, and they're also at the same time exhibiting bearish trends. So generally speaking, these are candidates for strong bearish ideas. Conversely, we have what we call trend reversals, or contrarian trades, trades that are starting to turn around. We have our bullish turnaround and we have our bearish turnaround. A bullish turnaround is a stock that currently has weak relative strength, so a stock that's currently underperforming the market, but has started to exhibit bullish trends recently. So this is what we're typically looking for if we're trying to catch stocks near their bottom. So for those of you that are long-term investors and you want to buy stocks near their bottom, but you want to confirm that bottom first, this is where bullish turnarounds are generally useful for, because these are stocks that have already started to exhibit those bullish trends, and you're not trying to catch a falling knife. Conversely, a bearish turnaround is a stock that currently has strong relative strength. So stocks that are outperforming the overall market, but have started to exhibit bearish trends recently. So stocks that are that have been very strong, but seems to have peaked already and starting to turn lower. So if you're in these stocks, it's time to potentially start selling them or start getting more aggressive on your cover calls that you sell on these stocks. So those are the 4 primary categories that you'll find when you use relative strength and the trend indicators to give you a sense for where a stock currently is in its cycle. Is it trending higher? Is it starting to turn back? And so on and so forth. So I think the best way to really learn this is by example. So what I'm going to show you first is our watch list, because our watch list was really built from the ground up to show you how a stock, where a stock is within one of these 4 categories. So in the first category, we talked about strong bullish stock. So stock with a strong relative strength and exhibiting bullish trends. So what I have here is I have a few watch lists. I have a few names set up in a watch list, and I want to show you how easy it is to identify a stock and whether it's which one it falls under just by looking at it visually. So one of the first things that I always do when I use my watch list is I sort my watch list based on the score. That's the relative strength indicator. That tells me how strong a stock is compared to the overall market. So once I sort it by the score, what I get is effectively the strongest stocks on top and the weakest stocks at the bottom. So immediately I can get a sense for where I want to pay attention to, whether I'm looking for bullish and bearish stocks. Now, then what I do is I look at the color across these symbols. So colors that are green tell me these are bullish stocks and from a trend perspective. And because they're at the top of my list, these are not only strong stocks, these are strong stocks that are exhibiting bullish trends. So that's why McDonald's, Dr. Horton, and AT&T are what I would consider strong bullish stocks. Conversely, on the bearish side, strong bearish stocks, these are the stocks at the bottom. These are stocks that are red, like Philip Morris with a score of 3, Robert Half International, which is also a score of 3 and red across the board, and Sealed Air Corporation, which is also 3, but red across the board. So I look at the color and I look at the score, and without even having to look at a chart, without having to pull up any data on that stock, I can get a sense for the directional view of that stock. And then I have a few examples of stocks that are sort of in between. So for example, let's first take a look at some bullish turnarounds. So these are stocks with weak relative strength, but starting to exhibit bullish trends. So HPE, Hewlett Packard, PVH, the clothing manufacturer, these are stocks with relatively low scores, but notice how the 1-month trend has started to turn positive. So this gives me an indication that these are stocks that are weak stocks, but they're probably starting to bottom. So these are stocks that I want to start watching for potentially turnarounds. So either buying some call options or maybe even buying the stock themselves. And lastly, for the bearish turnarounds, these are strong stocks that are currently starting to move lower. So look at Cerner Corporation, score of 8, but notice how the 1-month trend is starting to dip lower and the 6-month trend is neutral. Same thing with American Express, score of 7, but red and yellow across the board. X-Ray Dental Supply, also score of 7, starting to is red across the board. And Smucker's, the jam company, also same thing, score of 6, which is somewhat neutral, but the fact that I'm seeing red across the board is showing me this is a stock that's starting to turn around. So as you can see, we built our watch list to be extremely visual so that you can sort it and immediately see where should I look for bullish candidates, where should I look for bearish candidates, and what stocks are kind of starting to turn around. So whether it's I want to buy some stocks that are relatively low right now and starting to turn around, or stocks that are starting to turn lower and maybe looking for some bearish tactical opportunities. But we really built this from the ground up to really make this process as easy for you to find as possible. And again, I'm going to go through as many examples as possible to try to show you this. So now what I want to do is I want to explore, the thought process that we go through here at OptionsPlay to help find the ideas that we trade ourselves. Because, as much as many of you attend our webinars every week where we talk about option strategies and the best practices for those strategies, we get a lot of feedback and questions from users asking us, how do we find ideas? And this is really why we wanted to do this webinar, is make sure everyone understands the tools that are available to you here at OptionsPlay that help you find ideas. Now, how many of you were familiar with these trend indicators and the relative strength indicators here at OptionsPlay? If you can just type into your chat window either a yes or a no to give me a sense for how many of you currently use our relative strength and trend indicators, that helps me understand kind of the audience here in the room. How many of you are currently using these indicators and how many of you do not? Just a quick yes or no would be very helpful. Okay, so it looks like a fair amount of you say yes, but I'm seeing quite a bit of no's as well. So for those of you that are currently using it, great. I really hope that this has been useful in helping you get a sense for, the directional views. And for those of you that have replied no, I really hope that this helps illuminate a little bit more about the power of this platform beyond just the options trading piece. So what I want to do is I want to walk you through kind of our thought process when we try to find ideas, right? Because when we're trading options, we need to have ideas. So what we really take here at OptionsPlay is a top-down approach. What that means is that we look at the overall market first, then we look at the underlying sectors before we scan for individual names themselves. So what I want to take a look at before we get into the details of that, just a broader market update, what we're currently seeing. I want to try to do as many of these as possible. Now, as far as the broader market update, one of the things that we have spoken about quite a bit over the last I would say, a few months is the fact that we've had this major resistance level on S&P here around 295. We had a rejection back here, in late last year. We had a rejection again back here in April. Broke above it a little bit, but then we quickly came back below that. And recently we just broke back above that 295. We had a bit of a trap here where it trapped a lot of people going long into the market and then quickly reversed lower. So we've got this move up higher again. Be careful on this because this move, as you can see, happened on relatively low volume. But the fact that the RSI is not nearly oversold is probably supportive of a move higher here. So that is currently our position on the market, is we're cautiously bullish on this market, but we are aware of the fact that we did break above 295. Momentum is positive and it's not overbought. But we want to watch for a potential long trap, basically where the market moves a little higher and then corrects right back down. So we could easily have this bit of a double top here, and fall right back down. So be careful about that. But we are cautiously bullish on this market at the current moment. So we always want to start with the broader market overview first before we look at individual names, because to do the top-down approach, you need to get a sense for the current market. Then you need to get a sense for the individual sectors, how they're performing, before you look for individual stock names. So we use the same methodology for our sectors, because I'll show you in 1 second where we have these types of setups. We have a watch list actually built for you based on our sectors. So you can actually scan and see which sectors are strongest, which sectors are weakest. So what we do is, in the current market environment, because we are in more of a bullish stance on the overall market, what we're trying to look for here is strong and bullish sectors. And then within those strong and bullish sectors, we want to try to identify strong and bullish stocks within those sectors. And then what we try to do as far as timing goes, we try to find technical buy signals to actually find our strongest ideas. So when we're looking for high probability setups, we like to try to find as many of these factors as possible all lining up in order to set up for a long strategy. And then if we were to reverse and feel that we are now approaching more of a bearish opportunity, and keep in mind that when I say a bearish market, that doesn't necessarily mean that the markets are going to turn around. A bearish market could also mean that we are maybe near a double top. So let's say the market moves a little higher, forms a bit of a double top, and starts to move back lower. If we get that kind of double top move here, that might be an indication of more of a bearish trade. So if this stock, if the S&P breaks below 295 again, then we would maybe have another bearish outlook on the market. So bearish could mean a fairly short-term bearish outlook. It doesn't have to be a long-term bearish outlook, but when we have that bearish outlook, what we then want to do is scan for weak sectors, weak and bearish sectors, and then scan for weak and bearish stocks within those weak and bearish sectors. And then lastly, we try to find some stocks with a technical sell signal, whether we're using RSI or MACD or stochastics. Any of those are suitable. If you can have all of those things line up, that's when you're going to be able to find the strongest and the highest probability setups for either a bullish and bearish idea. So with that, what I want to do is I want to jump over to OptionsPlay. I want to show you guys what I just showed you in action. And I think that's a much better way for you guys to see what I'm referring to. So when we start off our day, I always take a look at the overall market. So as we said before, S&P recently just broke above that 295 level. We're now trading at 297.25. So well above that 295 resistance level. This certainly puts me back in that bullish stance that we have been in, even though we had anticipated a break happen, but until it actually does, we did not go strong into the bullish markets. But now that things have broken higher, that's when we want to take a look at the specific sectors. So we actually have pre-built watch lists for you. So first thing, what I typically recommend is for you to take a look at the sectors ETF, because that gives you a sense for what are the strongest sectors, like real estate and consumer staples, what are the weakest sectors, energy and healthcare. And I don't think that that comes as a huge surprise for most users as far as why these are some of the strongest and weakest sectors currently. And this helps set up your thought process. So if you're looking for ideas, you typically want to focus your attention on perhaps real estate, consumer staples, technology, consumer discretionary, and utilities. In this strong bull market, I actually like technology and consumer discretionary versus real estate, staples, and utilities, which tend to outperform a little better as more defensive sectors. Those have been doing really well with this new volatility that we've seen in the markets, where a lot of fear has crept up into the markets, and those sectors have really outperformed during that time. And then when things look good, the growth sectors like technology come back to life. And as you can see, today's price action, we're seeing technology up 2%, discretionary up almost 2%, while real estate, consumer staples, and utilities are actually down on the day. So that's actually somewhat expected based on the current market. But it's interesting to take a look at financials is also starting to come to life as interest rates start to pull back. So you do want to try to put together some of the macro themes that you do see in the markets along with this. But if you're able to use all of this type of information, that's when you're going to be able to find these high probability setups. So I've already created a watch list here based on some of the symbols that I've scanned for today. But notice how quickly I can pull in an individual sector. So if, let's say, I want to take a look at discretionary, which I know is one of the strongest sectors. Now I can look at all the names in the discretionary sector and say, well, here, all these names here at the bottom, these are the names that I don't want to look at. The names at the top, those are the ones that I really want to pay attention to. And if you were in these types of names, you would have been able to find a lot of the names that have been doing really well, like Dollar General, Target, Costco. These are the stocks that have been doing really well lately and have really killed it on earnings, have been the stocks that are the stocks that have been extremely strong for quite a few weeks. And this is really how you can utilize this tool to quickly decipher where a stock is. So I'm going to go back to the directional, the names that I found here today. And I just want to walk you through this real quick to show you, the strong bullish stocks versus the strong bearish stocks and the turnaround stocks, to show you how quickly you can utilize this tool to find those ideas. So I'm going to look at McDonald's. Like I said, without even having to pull up a chart, I can tell you McDonald's, Dr. Horton, and AT&T are the stocks that are strongest. And if you click on any stock, as you can see, these are stocks that are clearly outperforming the overall market. They are continuing to exhibit bullish trends. So AT&T not only is bullish, but notice how it's been consistently bullish since June here. So notice how the trend indicators have almost consistently remained green this entire time as the stock rallies. There's a small dip here, but once it turns green again, that's actually in itself a fairly strong buy signal. Let's look at Dr. Horton. Same thing, as you can see, strong, consistent stock. As you can see, this trend has been bullish for since late July, and notice how the stock has really moved that whole time, and the trend indicator has remained green that whole time with a technical score of 9, telling me not only is this stock exhibiting bullish trends, it's also relatively strong compared to the overall market. So you want to not just look for trend strength, you also want it to look for relative strength. And lastly, McDonald's, same thing, stock that has been very consistently strong for a very long time. Notice how the trend indicator has stayed green pretty much since, February of this year. And notice how consistently this 6-month trend is. It hasn't turned negative once in that time frame. The 1-month trend turned bearish or neutral just a couple, very small amounts of time here. But once you get that resumption, those are usually, again, strong buy signals when you get these 1-month trends that turn neutral for a period of time and then turn back to bullish. So those are all potential entry points for a stock like this. Conversely, if you were looking at a bearish trade, looking at stocks like C, notice how this is a stock that's relatively weak, consistently moving sideways and moving lower. Recently just broke below a major support level here at 40 as well. So, these are all things that I'm typically looking for if I'm looking for a bearish opportunity, is bearish trends weak relative strength, and if it breaks below a support level, those are even better opportunities to look at. Philip Morris. This stock has really taken a pummel over the last few weeks or so. A lot of it was news-based with the whole FDA cracking down on cigarettes, and the fact that a lot of these tobacco companies have invested in marijuana companies that are not performing very well right now, have put a lot of pressure on these specific stocks. Weak relative strength. 1 month and 6 month trend is bearish. It just turned bearish a few days ago, and it broke below a support level. So these are all the types of things that I would be typically looking for a short opportunity. And then I just want to take a look at some turnaround trades. So let's look at HPE, Hewlett Packard. So Hewlett Packard, as you can see, consistently an underperformer over the last year while the markets have rallied. That's really why we have such a weak relative strength. So this is a stock that has continued to decline while the markets have moved sideways to slightly higher. But as you can see, recently it really put in a bunch of these lower lows, or it has cannot put in any more lower lows, and has really kind of just stayed sideways here and is starting to move a little higher. So we're actually getting higher lows. Recently just broke above a resistance level. So these are all things that we would typically look for on an individual stock. So if this stock clears back above that 14 level, then we might see some moves to the upside here. So those are the things that I'm typically looking for. And this would enter my watch list now because of the fact that it's a 4, but the 1 month trend recently just turned mildly bearish. Now, that's not to say the stock won't turn around and just continue moving lower. But if that does happen, then the 1 month trend will turn bearish again. And that's a good time to also get short into a stock when you have the 6 month trend that remains bearish, but that 1 month trend starts to turn neutral for a little bit and then turns back to bearish. Those are a lot of the things that we typically look for in our trading. And then lastly, look at a stock like X-Ray. This, as you can see, was a stock that has outperformed the market actually throughout 2019. This stock went from 35 to $60 in the course of a year. So it clearly outperformed the overall market, but as you can see, recently has started to pull back. And that's what our trend indicators are trying to show us here. If we zoom in a little further, notice how this stock has really started to turn, the trend quality really started to deteriorate here on the 1 month in early July, and then the 6 month deteriorated here in late July, before this actual sell-off. So if we look at our trend indicators, things actually started to turn negative here on July 25th, before the sell-off. And so if you were able to catch something like this, hopefully, if you were long the stock, this trend indicator would have told you maybe it's time to start getting out or start taking profits on your stocks before the stock starts to head lower. And the fact that the trend have now turned both bearish, now it's an opportunity to actually get short this stock, in my opinion. This looks like a massive head and shoulders formation. And as you can see, it's starting to break below this major 51 support level. If we do get a break below, I think there's a lot of opportunity to the downside. There's a huge vacuum to the downside, all the way back down to 40 or so. So these are the different ways that we utilize our watch list to scan for ideas and quickly look for ideas without having to look through thousands of charts. We can just look at a watch list and very quickly get a sense for which symbols on a watch list we want to pay attention to. You can create your own watch list. You can use our pre-built watch list, and you can use the color coding to help you better understand which symbols to pay attention to. So I think the best way to really show you guys some more examples is to allow you guys to actually submit some symbols. So if you have any symbols that you want us to take a look at, please just type them into the chat window, and I'll try to go through as many as I have time for. And part of this exercise is really to show you how easy it is to use this platform to look for to gain a directional view. Now, I'm going to ask if those of you that are submitting symbols to please submit symbols that are relatively larger cap. I don't want to necessarily go through too many small cap names. So let's look at Shopify. Shopify's this is a clear strong stock. So this is a stock because it's actually a relatively small cap stock. As you can see, strong relative strength, 1 month and 6 month trend is bullish. hard to argue with this, hard to go short this, but I will say the fact that it's been bullish for so long is concerning, meaning I do think it's sometimes late to get into a name like this. But like I said, when you have these types of strong moves, notice whenever the 1 month trend turns neutral for a short period of time, like right here, right here, right here, and right here, and even here, when it turns neutral for a short period of time and then turns bullish again, those are usually very good buy opportunities. So when you see this type of pattern, this is really a good time to consider going long. And notice how these were almost all consistently local lows, which would have been a great time to go long this specific stock. So that's one thing that you want to look out for when you're using these types of indicators. Let's see. Let's go SPG. Jason asked for SPG. Weak relative strength, 1 month and 6 month trend is neutral and bearish. So, you know, as you can see, what I was showing you before, this is the exact opposite of Shopify. So the 6 month trend has remained bearish the entire time. And notice how there were quite a few opportunities where the 1 month trend turned neutral and turned back to bullish. Bearish, sorry. So these are all opportunities, in my opinion, to get short when you get that indicator. And we're currently seeing one right now. So if you see this turn bearish again on the 1 month trend, that is an opportunity, in my opinion, to get short. Tom is asking for AMD. Let's see, AMD. Very strong stock, but notice how the 1 month and 6 month trend is neutral. So this is a very choppy, you know, price action. So, you know, kind of stuck between this 29 to 34 range. This is hard to trade, in my opinion. You know, in this chop, you basically either have to wait till it's near the bottom and you buy it. And because it has very strong relative strength, I would be more inclined to buy near the bottom than sell near the top. But if this does pull back to this 29 level, I would be looking more at some potential bullish opportunities rather than bearish. That would be my my take on this. Ashok, you asked for a couple of names, but I'm not familiar with them. I want to just cover large cap names if possible, or names that people are familiar with. So if you have another symbol, I'm happy to take a look at it. Joseph has asked for Roku. Very strong stock, 1 month and 6 month trends is bullish. This is everything leaning towards bullish again, but I have some reservations about going long a stock that has been bullish this long and has moved up this high already and is near its all-time highs. So everything certainly points to bullish. If you feel comfortable taking on that type of risk of going long now, by all means, but I would highly recommend you to do it using options and limit your risk. So up till now, I haven't really talked about options at all, but I'll bring up options now because I think this is a good example of this. Because buying 100 shares of this stock will cost you 16 grand. That's a lot of risk to take on a stock that's near all-time highs and it's up, you know, what, 200, 300% over the last couple of months. You know, I never like to go along those types of stocks, at least not with stocks, versus I can buy a call spread on this if I do expect continuation higher for just $1,100. And if I do expect this continuation higher, and I have no idea how far the stock can go, but I do think it's within spitting distance of 200. If you do get a move up to 200, you know, 20% move on the stock versus a 205% return on the call spread, I would certainly want to risk only $1,100 to try to make $2,300 versus risking $16,000 to make $3,300. That would be my bet on a trade like this. And this is really where the options play shines, because not only do we provide you with the underlying symbol research to give you a sense for your overall directional view, but more importantly, we show you how to leverage it immediately utilizing options with the least amount of risk, regardless of whether you're bullish on the stock or maybe if you're bearish on Roku, right? So you can maybe take a contrarian trade and say, look, this thing has gone way too far, way too quickly. I think this is going to come back down to maybe, you know, 136 or maybe even 119. Let's get bearish here. You click on the I'm bearish button and you'll immediately look at some bearish opportunities. $1,200 to take a bearish bet on this for October 18th. You know, those are the types of trades that I would be looking for if I'm looking for this. Wayne is looking for WPM. So this is a precious metal stock. So we currently don't rank the stock because this is a relatively small cap name. But, you know, the stock has really pulled back lately. The 1 month We actually, the 6-month trend is actually neutral here. Hard to say right now for this particular stock, but it does look like it's starting to bottom and turn around a little bit. But this is, again, a small cap stock that we currently don't rank. Canopy Growth. Let's take a look at Canopy Growth. A very weak stock. 1 month and 6 month trend is bearish. So this is everything pointing to bearish. You know, these marijuana stocks have really taken a beating. You know, I actually thought these were starting to turn around a little bit here in June, but that hasn't really happened. And this is continuing to move south. So this is everything looking for me as more of a bearish trade. The only thing that you want to be careful with some of these trades is that puts are really expensive. Even this put spread, you know, relatively low options play score on that. So be careful if you're trading these on the short side. Sam is asking for BNS, Bank of Nova Scotia, relative score of 7, 1 month and 6 month trend just turned bullish. This is very similar to the JPM trade that we recently just put on. We basically saw, you know, a strong stock that was, you know, near a bottom and looking like it was going to turn around, especially in this interest rate environment where we thought that, you know, bonds were a little overdone and it was going to pull back a little. This stock is really taking advantage of that as well. But notice how the options really don't look very good here. Probably because they don't list many strikes here. And that's really the problem here, is that there are not enough strikes listed on this particular stock. So even though I'm fairly bullish on this from this perspective, you know, I think the options don't make a lot of sense. Francis is asking for Coca-Cola. Very strong stock, as you can see, relative strength of score of 9, 1 month and 6 month trend is bullish. Everything points to a bullish opportunity here as it breaks to new 52-week highs. Options play score of 119, very strong score. Notice how it only cost me $84 to make a bullish bet on Coca-Cola versus $5,500 to buy the shares. This is the type of options play that I would typically be looking for. Skyworks, very neutral score. 1 month and 6 month trend is bearish. This gives me more of a bearish tilt to this. You know, ever since it kind of broke below this $79, $80 support level, I think this is probably heading back down to 67 or so near these lows. I would certainly be looking to leverage a put spread like this to take a bearish view on a stock like this. AMD, did I just cover that already? Nope, I don't think so. 1 month and 6 months trend is bullish. Oh, I think I did cover this. Yeah, this stock is trading in a lot of chop. Very strong stock, but if it does pull back to this $29 level, you know, I'd be looking for a long. APHA, I think that's very similar to the Canopy Growth one that I just looked at, so I'm going to skip that. Beyond Meat, Joseph is asking for Beyond Meat. This has been a popular one because this thing just started trading. There's not enough trade history to really rank this stock or even calculate the 6 month trend. So there's not a lot going on here. The only thing I will say, options are very expensive, so be careful when you're trading these. Newmont Gold Corp. Gold is absolutely gone gangbusters. I think that there's probably some room still left to the upside on gold because of the fact that you know, this is really a flight to safety from the low interest rate environment. So, you know, 1 month technical score of 9, very strong. 1 month and 6 month trend is bullish. This stock did pull back a little, 4% today. If the trends remain bullish, I actually think that that is an opportunity to get long. Because you usually want to get long on these pullbacks, and we're starting to see that. So this might be an opportunity to leverage some call spreads to play for, you know, move back up to $42, $43. Stan is asking for Netflix. This is a stock that has been on my list for a while now. You know, we went short this around the 315, 320 level. We got out around the 295 level. I as bearish as I am on Netflix because the technical score of 3, 1 month and 6 month trend is bearish. And the fact that this stock continues to move lower while the markets are moving higher, this is everything that's telling me that this is bearish. But I want to see a break below this 285 level, because if it does break below 285, you know, I think that there's a big vacuum here to the bottom near to that 240 level. So I would be looking for a break here of that 285 before I get short this particular stock. Next, let's look at Intuitive Surgical. Relative strength of 5, so very neutral. 1 month and 6 month trend is bearish. This is certainly more of a bearish tilt. This is really also a bit of a range bound stock. So my concern here, as bearish as I am, is that I don't know how much further it can go, maybe to this 455 level or so, which actually, if you look at these trades, sets you up pretty nicely on a put spread where you're buying the 510 put, selling the 455 exactly. So this is actually where I'd be looking for maybe potentially a bearish trade on Intuitive Surgical. Ed's asking for Microsoft. Very strong trend, score of 9. 1 month and 6 month trend is bullish. Everything leads me to bullish. This stock, did rally up to about 140 today. I think a lot of technology stocks are set up very similar to Microsoft right now. We're long Apple right now. I think a very similar setup to Microsoft. Trading in a bit of chop lately between 215 and 195. Really looking for a break above 215. Same thing with Microsoft. I think you need to see some moves to the upside before you get long. Tesla, Gilbert's asking for Tesla. This is one of the stocks that, for me, I don't love trading, but this does make big moves. Technical score of 3, 1 month and 6 month trend is bearish. So this is a classic bearish trade. So for me, from my perspective, I'd be looking for a move to the downside to around this 180 level or so to the downside. I have not had much luck shorting this particular stock, but as you can see, the options here are pretty cheap. Only $1,100 to take a bearish bet. That'll return you $2,700 if the stock does revisit that 190 level, or if it goes even further, you can make probably closer to $3,000 on that particular trade. So, interesting trade to make if you are willing to take the risk here on Tesla. So as you can see, I've tried to go through as many symbols as I have time for here, and I know there are a lot more, but I don't have more time to go through it. But the whole point of this was just to really show you how easy it is to take the indicators that we have here, plug in any symbol that you want, or use the watch list that we have, and quickly get a sense for the technical score and the 1 month and 6 month trend to get a sense for your relative directional bias or directional view on that underlying stock. Once you have that directional view, you can either push I'm bullish and look at 3 bullish strategies, or select I'm bearish and look at 3 bearish strategies. So with that, I just want to thank everyone for taking the time out here this afternoon. I hope that this was illuminating for you guys to show you just, how we utilize this platform to look for ideas, and how we utilize this platform to look for levels to decide whether it's the right opportunity to go long or short an individual name, and the different things that we look at. And as you can see, we don't have 10 different screening criteria. We don't look at fundamentals. We don't have to look at 10 different screens to figure out a sense for a directional view. Just by looking at the trend indicator, the relative strength indicator, and some basic support and resistance levels, we can get a pretty good sense for the directional view and what the potential risk and reward is if we're right or if we're wrong. And that's really helpful, in my opinion, in getting a sense for how to use our platform. And I hope that this was insightful for you guys to see someone else who's created this to go through this and show you how to utilize this platform. So with this, what I'm going to do is I'm going to open this up for Q&A. I don't, unfortunately, have a lot of time to go through questions today, but I'll try to answer as many questions as I have time for before I have to sign out for today. So thank you so much for taking the time out here this afternoon, and we will send out the recording and the slides after we finish here today in about 30 minutes. And I just want to say again, for those of you that do not have access to OptionsPlay right now, or do not have a subscription to access the tools, please go to this link right here to sign up for your free trial, or you can log into your account and start your subscription so that you can have access to this great tool to do your trading. Any questions? So Peter, Jason, Alfie, thank you so much. I really appreciate the time. Wayne, same thing. Thank you so much for coming back every week and participating and providing me your thoughts and feedback. I really appreciate this. We really try to do this for you guys so that you guys get the support you need to do your options trading. Francois is saying, on a call or put trade of $1,000, where would you put your bracket to get out, either profit or stop loss? Great question. So on the stop loss side, we usually cut our losses at about 50% loss. On the profit side, we usually try to take profit somewhere around 75 to 100% gain. Molly, thank you so much. I really appreciate it. Kev, resistance calculated by your software? Yeah, so not only do we calculate the resistance, we actually display it to you on your screen. So you can actually move your mouse and see where that support and resistance level is on your charts. What is the best way to use OptionsPlay during day trading? So I'll be honest, this is not built for day traders because we don't even do intraday charts. And the reason for this is because options is not a day trading vehicle. The spreads on options, you're barely going to cover those spreads in a single day. So that's why options trading is not really suitable for day trading. Dennis, thank you so much. Eric, how are you determining the 1 month and 6 month trend? The 1 month and 6 month trend is a proprietary formula. However, we use a triple moving average for each one, a 20, 50, and 200-day moving average. And what we're really looking at is how the asset is performing against those three moving averages. And we're also looking at how those moving averages are in relation to each other. So it is proprietary, but we use a 20, 50, and 200-day, a combination of simple and exponential moving averages to give you that reading. And not only can you see the reading up top, but you can see how that trend has changed over time at the bottom of your chart. Alex is saying, how about the list for trade ideas? How do you assemble that? Great question. So the trade ideas is fairly simple. Bullish ideas are stocks that have generated a buy or a buy technical signal, and they exhibit bullish trends. So what we look for is stocks that have, so for example, Amgen, as you can see here on the CCI, crossed above that -100 level, which is a buy signal on the commodity channel index, and it exhibits 1 month and 6 month trends are bullish. 9 month technical score is strong. These are the things that we're looking for in our trade ideas list: is a technical buy signal, and the 1 month and 6 month trend is bullish. Any other questions? I know I went over a lot of information here today, and I know I went through a lot of examples, and I went through them fast because I wanted to show you how, how easy it is to use this platform to look at a lot of different ideas very, very quickly. But I understand that, not everyone may necessarily follow everything along at the same speed that I did. So I do highly recommend that you take a look at the recording after we send it out today. I'll include the slides as well so that you can review the, the 4 different criterias: the strong bullish, strong bearish, strong bullish, strong bearish, bullish turnaround, and bearish turnaround, and take a look at this chart and see how they map up. And that will allow you to learn the visual cues that you need to look for on the watch list or the trading ideas list to quickly scan for ideas. Tim, what if it won't let me sign up? Tim, if you don't mind, send me an email at info@optionsplay.com, and I'll try to look into that for you if you have any questions. So unfortunately today I have to run. I really appreciate you guys taking the time out here this afternoon. Like I said, I will make sure the recording is sent out to everyone before I leave here today. And if you have any feedback, please send me an email at info@optionsplay.com. I'm happy to try to incorporate any thoughts that you have into future webinars. And I will see you guys next Thursday, where we are going to continue talking about how to trade this market, because this has been a great market for trading. For those of you that follow our daily plays, this has really been a stock pickers environment, and we really want to make sure that you guys have the tools in order to capture this type of opportunity that we're currently seeing, unlike the previous couple of months where things were very, very quiet. There weren't a lot of opportunities for picking stocks, but right now is the exact opportunity for picking stocks. So we're really focusing our webinar this month and even last month on showing you how to do that. But last month we covered a lot of option strategies. This month we were focusing more on finding you ideas. So with that, I want to thank everyone for taking the time out here this afternoon. I really hope that this has been useful. I hope you guys have a great afternoon and happy trading, and I'll see you guys next Thursday.